Now, first of all, if the economy was really as strong as everybody claims, why does it need a record amount of fiscal stimulus? When you have a strong economy, that's when the government is supposed to run a surplus because the economy is so strong and it's supposed to pay down the deficits that it ran up when the economy was weak. But here, everybody is talking about how great the economy is. You got a big drop in gold the last few days. Gold's about $50 an ounce lower than it was when I did the podcast on Wednesday. It was at 2,700, basically just below. In fact, it went to 27.17 or so after that. It had a little rally. It almost got, almost got close to new highs. And then these bad inflation numbers clobbered it. And now gold is back to 26.50. But inflation is good for gold. I've been talking about this paradox for years now because the markets don't get it. When the markets see hotter than expected inflation, what the traders believe is, the Fed's going to have to fight harder to win the inflation war. And that means higher for longer, not as many cuts, a tighter Fed. That's good for the dollar. That's bad for gold. They're wrong. What higher than expected inflation means is that the Fed already lost the war on inflation. It's not going to fight harder. In fact, it's going to surrender. Inflation won. It just hasn't admitted that yet. It's still pretending. The Fed is still pretending that it won. It didn't even come close to winning. It's already surrendered. The markets just haven't figured that out yet. But at some point, they're going to realize that that white flag has been waving, and that is bullish for gold. Higher inflation is always bullish for gold, especially when the Fed can't do anything about it. Their hands are tied behind their backs. In fact, before too long, probably during the Trump administration, the Fed is going to have to fess up and say that it's willing to accept higher inflation, that's just the price we have to pay to stimulate the economy, to deal with the debt, to whatever. It's going to come up with an excuse. I don't know if it's going to raise its official target to 3 or whatever it's going to do, but it's going to be cutting rates. It is going to be doing quantitative easing, even as the inflation numbers move further and further north of 2%. And in fact, we got numbers on Thursday for jobless claims that unexpectedly shot up from 225,000 last month to 242,000. Last week to 242,000 and in the last week. And the 4-week moving average jumped up from 218.50 to 224 and a quarter. This is the highest number of claims we've had in a while. And again, could be the beginning of a big trend on increasing unemployment. The economy is weak. Again, the weak economy is the reason that Trump was elected. And that weak economy that got Trump into office is going to continue while he is in office. The tax cuts may stimulate consumption, but they're not really going to stimulate the underlying economy.
When we talk about gold and silver, we're not just discussing commodities or assets. We're delving into the backbone of economic stability that has endured for millennia. Peter Schiff's narrative, centered on the systemic economic issues underpinning the U.S. financial system, provides a compelling case for why gold and silver are not just investments, but necessities in a volatile world economy. Let's start with the notion that the economy is strong. Schiff dismantles this myth with precision, pointing out the glaring contradiction. If the economy is as robust as the government claims, why does it require unprecedented levels of fiscal stimulus? A genuinely strong economy generates surpluses during booms to offset deficits during downturns. Yet we see the U.S. government running record deficits, even as officials tout economic recovery. This paradox is underscored by recent inflation data, which sent shockwaves through financial markets. Gold, often seen as a hedge against inflation, paradoxically fell on news of hotter-than-expected inflation figures. This reaction epitomizes a market misunderstanding. Traders erroneously believe that higher inflation means the Federal Reserve will fight harder, leading to tighter monetary policy. Schiff argues that this interpretation is fundamentally flawed. In reality, persistently high inflation is a sign that the Federal Reserve has already lost the fight. The Federal Reserve's position is untenable. With inflation running high, it faces immense pressure to maintain credibility while avoiding economic collapse. As Schiff astutely observes, the Fed will likely resort to cutting interest rates and resuming quantitative easing, even as inflation spirals further out of control. This capitulation will be a tacit admission that the battle against inflation has been lost, a reality that markets have yet to fully grasp. The implications for gold and silver are profound. Historically, these precious metals have thrived in environments of monetary debasement. As the Fed inevitably pivots toward more accommodative policies, the stage is set for a significant rally in gold and silver prices. The economic backdrop makes these metals indispensable components of a sound financial strategy. Another critical issue Schiff highlights is the ballooning national debt. The United States recently surpassed $36 trillion in debt, with annual deficits reaching staggering levels. Schiff points out the inherent vulnerability of this situation. Rising interest rates dramatically increase the cost of servicing this debt, creating a vicious cycle of higher deficits and more borrowing. This dynamic is unsustainable. As Schiff notes, the U.S. government's reliance on low interest rates to manage its debt load is a house of cards. With rates on the rise, the cost of servicing the debt has become a significant burden. Janet Yellen's recent admission that she underestimated the impact of rising rates only underscores the gravity of the situation. Her apology, as Schiff aptly puts it, doesn't cut it. The damage has been done, and the consequences will reverberate for years to come. This speculative fervor is unsustainable. As interest rates rise and economic conditions deteriorate, the stock market bubble will inevitably burst. When it does, gold and silver will emerge as safe havens, offering protection against the ensuing financial turmoil. For investors, this confluence of factors represents a unique opportunity. Gold and silver are not merely defensive assets, they are strategic tools for wealth preservation in a world of monetary instability. Schiff's insights underscore the importance of viewing these metals not as speculative plays but as foundational components of a resilient portfolio. Gold's recent pullback, while unsettling to some, should be viewed as a buying opportunity. Similarly, silver, with its dual role as a monetary metal and an industrial commodity, offers compelling upside potential. As Schiff points out, silver often outperforms gold during bull markets, making it an attractive choice for investors seeking leverage to rising precious metal prices. Schiff's insights remind us that the financial world is complex, but certain principles remain constant. Gold and silver have stood the test of time, proving their worth in every economic crisis. In a world of uncertainty, they offer stability and security. As Schiff eloquently puts it, owning gold and silver is not about speculating on price movements. It is about safeguarding your future. The challenges we face are significant, but with the right strategy, they can be navigated successfully. Gold and silver are more than investments. They are anchors of stability in a turbulent world.
Meanwhile, Wall Street is celebrating. Donald Trump went down and rang the opening bell with his beautiful wife, Melania, who, she's 54. She looks fantastic. So, that sends a good signal, I guess, to everybody that there's a lot of beauty after 50 in modern women. But he was there with her. I think R.F. Kennedy Jr. was there with him. I forget the rest of the entourage that came down to the New York Stock Exchange, but they're all excited because, he's so pro-business. Well, he was pro-business when he was president the last time. That was the whole reason that everybody elected him. He was a businessman. He wasn't a politician. So is he more pro-business now than he was when he was elected the first time? No. I mean, maybe some of his cabinet people are a little less the establishment. They're very successful business people on their own right. But this is not a 180-degree change. Yes, we're going to have fewer regulations. Maybe we'll repeal a lot of the regulations that were put in place by Biden. But even if we go back to the regulations we had under Trump, we still had a lot of regulations under Donald Trump. The bigger issue, the ticking time bomb, is not going to get diffused. This deficit is exploding out of control, and the economy is on the verge of a severe recession, in part caused by the backup in interest rates. And interest rates are rising. I mean, even though the NASDAQ hit another new record high today, the Dow was down for the second consecutive week. The markets maybe are starting to take notice of rising bond yields again, rising mortgage rates again. And the economy, the data is not good. I don't know what people are looking at to keep talking about the fact that we have strong data. In fact, they must even know this. That's why they're cutting, right? They know that the economy is weak. They just want to continue to pretend that it's strong. Janet Yellen said in response to a question about the debt, she was asked, are you worried about the national debt and the size of the debt? And she said, no, I'm not worried at all, because the key is the financing cost, and interest rates are really low. And so it doesn't cost us a lot to finance the debt. And I said at the time, yes, but interest rates aren't going to stay low. In fact, the Federal Reserve just told you they're going to start hiking to fight all this inflation that you helped create. So she She specifically said the debt isn't a problem because rates are low, and now she's apologizing for not doing more about the deficit, especially since rates have gone up. Well, duh, we knew they were going to go up. She knew they were going to go up. I don't even think, sorry doesn't cut it. I mean, when you do this intentionally, she owes a lot more than that half-assed apology for the part that she played in this disaster.
As we move forward into an era marked by uncertainty, inflationary pressures, and mounting debt, Peter Schiff's insights into gold and silver become increasingly vital for investors seeking stability and growth. Part 2 of this exploration dives deeper into the dynamics at play, revealing why gold and silver are indispensable assets in the years ahead. One of Schiff's most compelling arguments revolves around the misunderstanding of inflation. He points out that markets mistakenly interpret higher inflation as a signal for tighter monetary policy, leading to a temporary strengthening of the US dollar and a drop in gold prices. This reaction, as Schiff emphasizes, is based on a flawed premise. In reality, higher inflation signals that the Federal Reserve's strategy has failed. The central bank has already lost the war against inflation, even if it hasn't publicly admitted defeat. The eventual capitulation, when the Fed acknowledges that higher inflation is here to stay, will mark a turning point for gold and silver. These metals thrive in environments of monetary debasement, and their resurgence will likely coincide with the Fed's inevitable policy reversal. Gold's enduring value lies in its ability to act as a hedge against inflation and currency devaluation. Schiff's assertion that gold is not rising in value, but rather that fiat currencies are losing theirs, is a profound insight. It underscores the necessity of viewing gold not as a speculative investment, but as a cornerstone of wealth preservation. In a world where central banks print money at unprecedented rates, gold stands as a beacon of stability. Its finite supply and universal acceptance make it the ultimate hedge against the erosion of purchasing power. As Schiff notes, the market's misinterpretation of inflationary trends provides an opportunity for savvy investors to accumulate gold at attractive prices. While gold often steals the spotlight, silver is an equally compelling investment. Schiff highlights silver's dual role as a monetary metal and an industrial commodity, making it uniquely positioned to benefit from multiple economic trends. In addition to its historical role as a store of value, silver's industrial applications, ranging from electronics to renewable energy, provide significant upside potential. Silver's volatility, while intimidating to some, is a double-edged sword. During bull markets, it often outperforms gold, offering leveraged returns for investors. Schiff's bullish outlook on silver is a reminder that this metal should not be overlooked. Its current undervaluation relative to gold presents an opportunity for investors to capitalize on its future growth. The United States debt crisis is a central theme in Schiff's analysis. With the national debt exceeding $36 trillion and annual deficits climbing to unprecedented levels, the country faces a fiscal reckoning. Rising interest rates exacerbate the problem, increasing the cost of servicing the debt and creating a vicious cycle of higher deficits and more borrowing. This unsustainable trajectory has far-reaching implications. As confidence in the U.S. government's ability to manage its finances wanes, the appeal of gold and silver as safe haven assets will grow. Investors seeking refuge from the volatility of fiat currencies and the instability of financial markets will turn to these time-tested stores of value. The Federal Reserve's predicament is another critical factor driving the case for gold and silver. Schiff argues that the Fed's ability to combat inflation is constrained by the broader economic realities. Higher interest rates, while theoretically effective in curbing inflation, risk triggering a severe recession. The Fed's balancing act, trying to manage inflation without derailing the economy, is inherently unsustainable. Eventually, the Fed will be forced to prioritize economic growth over price stability, leading to a return to lower interest rates and quantitative easing. This policy shift will further undermine the purchasing power of the dollar, making gold and silver even more attractive as alternative stores of value. The dynamics of the global economy also play a crucial role in Schiff's thesis. He highlights the actions of major economies like China and Russia, which are increasingly moving away from the US dollar. These countries are accumulating gold as a means of diversifying their reserves and reducing their reliance on the dollar-dominated financial system. China's massive gold purchases, coupled with its efforts to create a more resilient monetary system, underscore the growing importance of gold in the global economy. Similarly, Russia's fiscal discipline and low debt levels position it as a potential leader in a gold-backed monetary system. These developments reflect a broader shift toward the de-dollarization of the global economy, with gold playing a central role. Schiff's insights challenge conventional perceptions of gold. In the West, gold is often viewed as an asset to be traded, bought when prices are rising and sold when they are falling. However, this perspective misses the point. Gold's true value lies in its stability and its role as a counterbalance to the volatility of fiat currencies. When people realize that inflation is not about rising prices but about the devaluation of their currency, the appeal of gold becomes undeniable. This shift in perspective is critical for understanding the dynamics of the current economic environment. As Schiff puts it, owning gold is not about speculation. It's about getting out of a failing credit system. Silver's role in the economy extends beyond its monetary and industrial applications. Its scarcity and critical importance in emerging technologies make it a strategic asset. The metal is essential for the production of solar panels, electric vehicles, and other technologies driving the green energy transition. This dual demand, industrial and monetary, creates a compelling case for silver's long-term potential. Schiff's emphasis on silver as a key investment highlights the need for diversification within the precious metal space. By holding both gold and silver, investors can benefit from the unique strengths of each metal while mitigating risk. As we look to the future, Schiff's analysis offers a roadmap for navigating the challenges ahead. The confluence of rising inflation, mounting debt, and shifting global dynamics underscores the need for a robust strategy centered on wealth preservation. For investors, this means taking proactive steps to protect their assets. Gold and silver should form the foundation of any strategy aimed at safeguarding wealth in an uncertain world. Their historical resilience and intrinsic value make them indispensable components of a diversified portfolio. Peter Schiff's insights into the dynamics of gold and silver provide a compelling case for their enduring value. In a world of economic uncertainty, these metals offer stability, security, and growth potential. As the Federal Reserve grapples with the challenges of inflation and debt, and as global dynamics shift away from the dollar, the role of gold and silver will only grow in importance. For investors, the time to act is now. By understanding the underlying trends and positioning themselves accordingly, they can navigate the challenges ahead with confidence. Gold and silver are not just investments, they are lifelines in a turbulent economic landscape. The key takeaway from Schiff's analysis is clear. In a world of fiat currencies and economic instability, gold and silver are the anchors of financial security. Whether you're a seasoned investor or new to the world of precious metals, these insights provide a valuable foundation for making informed decisions. Stay informed, stay prepared, and remember, the future belongs to those who act today.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.